If you are ready to add a new member to your LLC, in this video, I am going to give you a step-by-step guide on what you need to do to make that happen. And when you stay until the end, I am going to give you my professional advice on whether you should or should not add a member to your LLC. But before we get into it, I want you to like, comment, and subscribe so that you can make sure you continue to level up your business and keep more cash in your pocket. So let's get after it. Generally speaking, business owners need from time to time to add other members to their LLC. It could be that you need some expertise in running your business that you don't currently have. Maybe someone is going to bring something to the table, such as marketing, such as operations, such as accounting, or perhaps it's a situation where you need some capital and you're looking for someone to add dollars to your business and you've decided to add them on as a member of your LLC. Regardless of the reason why, there are things that you need to know in order to add members to your LLC. And a lot of the things that we're going to be talking about also are going to be governed by your unique state. If you make the decision to add a new member to your LLC, make sure that they do bring something to the table. They need to bring to the table, again, expertise, some cash, some operational know-how. Maybe it could be they can open a door for you to be able to get your business to move further, faster. But regardless of whether or not you choose to add a member to your LLC and the reason why, the steps to get there are going to be predicated upon whether you are a single member LLC or whether you are a multi-member LLC. That's really important. So first, you got to understand where you are from the very beginning. One thing you're going to want to do is update your operating agreement. And many of you have started LLCs and you may not even have an operating agreement. It's important to understand what an operating agreement is and why you need it. So just as a quick rule of thumb, an operating agreement is literally just that. It's an agreement that you document on paper that talks about how your business is going to operate. When you are a single member LLC, you need to just go in and update your operating agreement to say that you're going to add a member to your LLC. And if you don't have an operating agreement, don't freak out. Just get an operating agreement right here, right now. That's the next thing for you to do. It's very important, especially as you get into banking, getting to do other things. They will certainly ask you for your operating agreement. If you are a multi-member LLC, in addition to amending your operating agreement to add in a new member, you have to first get a unanimous vote of all of your existing members. That's right. Everybody that is a current member of your LLC has to vote unanimously to add a member. Let me give an example. Let's say that you currently have 6 members of your LLC. You have to take a vote and all 6 members have to be in agreement to add that additional member. If one member is not in agreement, then you cannot add that individual to your LLC. So it's important that you do that. Once you come to that agreement, then you're going to update your operating agreement to now say we're expanding from 6 members to 7 members or 8 members to 9 members, whatever that expansion number is. It's important to update that in your operating agreement. Regardless of whether you're a single member LLC or a multi-member LLC, you're going to need to secure all of the new members' identifying information. You're going to need to get their name, their social security number, and their address, and do it from the onset. You want to use Form W-9 to make sure that they fill it out properly so you can have all the identifying information to be able to make certain that the tax returns and all of the tax matters are properly taken care of. In addition to adding the members to the operating agreement as a single member LLC, you're now going from a single member LLC to a multi-member LLC. And you need to notify IRS that this is what you're doing. So in order to notify IRS, you're going to need to fill out Form 8832, where you're notifying them that you're changing the taxability of your LLC. As a single member LLC, you were filing on Schedule C. Now that you are a multi-member LLC, you're now going to file Form 1065, and you want to notify IRS that there is going to be a change so that IRS can be expecting your Form 1065 and close out the need for you to file a Schedule C inside of your individual return. Housekeeping is extremely important when you're making changes to your LLC. Step 2 is dealing with the terms and responsibilities. This is such a big area that you really need to understand. And I do mean understand. The reason why I say this is because I deal with so many entrepreneurs that operate inside of LLCs, and this is always a problem come tax time, or always a problem when people that have come together to run a business have decided they're going to part ways. So you want to make sure that you get your terms and responsibilities agreed upon and solidified on paper in your operating agreement. When I am talking about terms, this means what is the person that's coming in as a member going to do? So for example, how much money are they going to pay to join my LLC? Are they coming in as a 50-50 owner? Are they coming in as a 20% owner? I'm going to remain an 80% owner. Is it going to be 60-40? You have to make an agreement to decide what that's going to look like. Many people naturally assume if we're going in together, it's going to be 50-50. But I am going to tell you, perhaps you want to look at that. Either way, you got to decide what that's going to look like, and you got to document that. You also need to decide what is going to be the profit sharing split and the allocation of any losses. LLCs are the only business where you can switch that around year from year. So maybe this person will participate in profit and they won't participate in loss. You got to make those agreements from the very beginning. Let's say, for example, that you're in a business with somebody and your equity in that business right now is 100 grand. Are they going to come in as a 20% owner and buy in at 20%, buy in at $20,000 to get 20%? Maybe, maybe not. I want you to realize that the buy-in does not have to equal the value of the business. You can decide what that buy-in is going to be as long as the two of you agree on what the buy-in is going to be. You also want to make sure you're clear on the responsibilities of the person that's joining your LLC. Will that person do a particular job, or will they have equal decision making like you do? Will they be able to obligate the LLC to a loan? Will they be able to go into the bank and take money out of the bank account? Will they be able to sign for big expenditures? You want to make sure that everything that can particular happen is addressed in the onset. And one thing that's extremely important to address is what happens if you decide to go through a divorce with your new member. It happens all the time. What does that look like? Who gets to keep the name? Who gets to keep the website? Who gets to keep the bank account? How are they going to exit the business? How are they going to be paid out? Are they going to be paid out? Who holds the relationship with the vendors, the customers, the client list? There's so much to it. As long as you get all of this documented up front, you're going to be in such a great position. And my advice to business owners is always document, 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 because an ounce of prevention is worth a pound of cure later on down the road. And if I had $1 for every time members came together and they told me, oh, we're best friends. Oh, I've known them since childhood. We get along better than our spouses. If I had $1 for every time I heard that, I would be a billionaire. So trust me when I tell you, this is such an important fact to raise from the very beginning. The third step to consider is taxability of the buy-in. This is very important for you to understand, because when you have somebody joining your LLC, they're in essence buying into your business. It's not free. It's very rare that someone should be able to come into your business for free. And the reason why I say that is because you started the business, you had the idea, you incurred costs, probably some headaches and some stomach aches too. So why do they get to all of a sudden jump on this train when this train is moving? Even though you need help, I don't want you to discount the work you've had to put in up until this time. So now you're going to decide on what that buy-in is. You know that amount, but the buy-in is going to be taxable to you, the member of the LLC. Allow me to give an example. Let's say that I have an LLC and I've incurred costs to get this LLC started at $10,000. Now I have my friend wanting to join in my LLC, and they're going to join in and perhaps come in as a 20% owner and give me $2,000. That means I'm selling my interest of 20% to this individual new member. I'm selling it for $2,000. But the real question is, what is my cost basis? Whenever you purchase anything, whenever you acquire anything, there's a cost associated with it. Allow me to give you an example. Let's say that I go purchase a car. It's real easy to say how much I paid for that car. I will have a bill of sale, a contract that will say Carla Dennis paid $30,000 for a car. Real clean, real clear cut. But when you're dealing with business, it's not that clean. That is why your books and records are so critical when you are thinking about bringing on other people inside of your business. So your cost basis, which is the cost to acquire, the cost you pay for something, really has to be properly tracked. And I want you to know that when you're dealing with an LLC, the cost basis is not simply how much money you put into your business. There's so many other things that go into that equation, including how much you drew out, which reduces your cost basis. Whether you got a loan that you personally guarantee, which increases your cost basis. It's a very complex calculation, and I highly advise that you get a seasoned tax professional to help you with this component of it. Your takeaway at this point is to realize that when you add a member to your LLC and they're paying you money to join, that you're going to have to do a gain on sale calculation. You're literally selling equity in your business. You're literally selling an asset within your business. And never, ever, ever think you're going to bring money in and it's not going to be taxable because it's going into the business. That is a major issue. And I can certainly tell you that that is a talk of conversation amongst regulatory bodies, IRS and state revenue departments, because they're realizing as many people are getting together with these side hustles and adding more people, that there's a whole big area of audit potential for IRS. I want to also make sure you understand the mechanics of how to actually get a member inside of your LLC. So there's no official website that you have to go to. It's nothing that you have to do officially other than update your operating agreement. Make sure it's listed in your operating agreement. If you are a single member LLC, making sure you fill out that form 8832 and just making sure you have solidified on paper what things are going to happen moving forward. The real big change comes when you get ready to file the tax return for the next year. The next year, we're going to make sure that that new member's information is now inside the tax return. If you're a single member, you're going to a multi-member return. That person is now going to get a K-1. And when the tax return goes in, they are officially listed as a member of your LLC. And IRS is going to now know you have an additional member of your LLC. There's nothing you have to officially report per se. Now, in the beginning, I told you making sure you dot the I's with your state. Some states will require you to update your articles of organization. For example, the state of California will require you to update your articles of organization, and the state of California will require a resolution to go into them to make sure that that happens. But that's unique to the state of California. For all intents and purposes, it's going to be updating that operating agreement, getting that identifying information, and make sure they're now included in the tax return that has to go in when it's time to file. But now you know that when you are going to add a member to an LLC, you need to update your operating agreement, you need to notify IRS, you need to make sure you solidify your terms of your agreement, and you need to take into consideration the taxability of what it is that you're doing. Now, I told you that if you stay to the end, I was going to give you my personal advice when it comes to whether or not you should add a member to your LLC. So here's the deal. If you are looking to raise capital because you need money to get your business going, my first line of defense is see if you can get a loan. That's what you want to do before adding somebody to your LLC. Why do I say that? Because if it's just about money and this person is coming into your business, giving you money, and they are not going to work, they're not going to be up all night trying to figure it out alongside you, you're going to start to be resentful because money's great, but the real deal is in the heavy lifting. The real deal is in the day-to-day. So I suggest that you look for some loan proceeds, whether it's SBA loan, a personal loan, go to your bank or whatever the case may be, before adding a member. I personally would not add a member unless they're going to bring some skill, some expertise to the table that Carla Dennis does not have. And they're going to be able to parlay my business faster, quicker with their know-how. Money, we can get loans from people, but it's going to be difficult to get somebody out of my business that is in my business and they're not helping me with my business. And when the money runs out, I'm going to have a full-on attitude. So that's my personal advice. Want to make sure you know what you need to do. And now that you know better, you absolutely have to do better, which is why I want you to like, comment, and subscribe so I can keep you updated on all things tax.